Focus. Ideate. Innovate. Enable.
Fast and furious is the kind of disruption we are seeing in the financial sector space. Today, the way we do banking or access financial product is radically different from what it was some 10 years back. And the way disruption is taking place today, it seems to me that in the near term, ATMs, digital wallet and credit cards will become passé. And the driver of all these changes is fintech companies. So is the fintech industry reinventing financial services? What will be the scenario of financial sector services 5 years from now? To get answers to those kind of questions, I have with me in the studio Manavjeet Singh, founder of Rubique. Manav, welcome to the show.
Okay.
Manav, if I may begin by asking you, has demonetization really given a boost to the fintech company like yours?
Certainly, I think as an event, demonetization probably an unprecedented kind of turn to our economic trajectory and as a country overall. In fact, it has sensitized most of the customers to move towards the digital formats. And in fact, last week when I was looking at the RBI data, while it has shown 1.43 kind of times transaction has grown in terms of size, but I think it's a great beginning. So certainly I believe this is one of the most important events in the recent history for this, especially the financial products.
So it's definitely given a leg up to a company like yours.
Absolutely.
So in any number of what was between pre-demonetization and now, how much in terms of absolute turnover or cards or loans?
For us, we have seen almost 40% kind of jump in terms, and more than that, the whole lot of financial institutions we are working with, and they have come forward and they believe, in fact, customers, our partners, influencers in the whole space, they have believed that online is the future. So that is something. So more than the transaction numbers, we have seen that shift which is taking place, which is most important.
So I want to draw attention. Today, the youngsters, generally Gen X, Gen Y or millennials, they are accustomed to a digital experience offered by companies like Amazon, Facebook, Google. Do you think financial institutions can offer a similar kind of experience so that they can also do switch?
Certainly, because all of us are changing as consumers, and so maybe 5-7 years back, what was important is that for financial products, that what kind of information you can have from different sites probably. But it's not about information anymore, it's about transaction.
Yeah.
So because loan, like for example, in our space what we do, is a derived need. You want to buy that product, maybe that car or that bike. So you need that loan for that. So speed is important, turnaround time is important. So that is where everybody, like in all of us, are changing, and that's where the change is happening. So from information is moving towards transaction. That is the biggest shift we have seen.
So I want to ask you, what does fintech company like yours bring to the table for people like me?
The most important part here is like, for example, when you go for a loan, when you go to a bank, even if you're existing bank, you have a saving account or a current account, every time the bank treats you like a new customer because loan you will be evaluated all over again.
Yeah.
And every financial institution will have a different risk appetite. And as per that, they will customize on the product, and certain set of customers they will probably say yes to, some of them say no to. But how customers will find out that. So the biggest service what we think which we are doing and how we leverage technology is just to ensure that the lender's criteria to select the customer and borrower's requirement, this is we're trying to match. Like at Rubique, we have a matchmaking algorithm.
Okay.
So the matchmaking algorithm essentially tells you what is the right fit for you. Like are you matching that financial institution's risk appetite, yes or no? So it'll fit into that particular profile and provide you that approval.
So once I come and register with you, so my profile is with you. So I don't have to keep coming and asking you, can I get credit card loan or car loan? You want to do the due diligence again and again.
So there are two parts to it. One is the approval. Like when we integrate with the bank system, so we give you in-principle approval online. But there's a very important aspect, there's a regulatory aspect, because you have to sign the agreement, complete the transaction and documentation. That of course is important. So as a company, we don't only provide that matchmaking algorithm, provide you that option, we help you conclude the transaction with helping you completion of documentation as well. Because we believe in India, still it's not 100% online, it is assisted online. So in that spirit, we are evolving as a model, and specifically, while retail, a large part of it can happen online, but in SME, the customer requires a lot of handholding, and specifically, a lot of time we have seen even documentation. How you complete that documentation, you require that help, post that approval.
Yeah, Mana, what I want to ask you is, your customer, are they tech savvy, or people from rural India also aware of your services? Or it's more pro-urban or urban India?
So I believe that the basic job of technology is to simplify or help the consumer get that convenience. So that's what we do. And in this particular case, because as most of India today across product lines is currently offline, and that's where we're leveraging technology, and with one simple objective, that how we can simplify the consumer's life. So to answer your question, I believe whether it's somebody who's taking a SME loan, or you're taking a retail loan in any category, or a credit card, so we are helping that particular consumer simplify the whole journey and get that loan approved as soon as possible.
So how much is big data or analytics helping you in terms of wooing the customer, sizing up in terms of credit worthiness, and how much is the internet helping you to penetrate the market? See, traditionally the brick and mortar banks or financial institutions could not reach that.
So in terms of the big data, I believe the data helps, and when we use as a company the data, what is the basic objective of that is, the first thing is to match with the right kind of profile, risk profile. So where exactly you think you can get that loan? Like, you know, that you have a certain credit score, you have certain salary, you have certain kind of area where you live in, or you have certain other obligations. So data basically helps you as a company, that's how we're using it, to get you the right fit. That is the first part. And secondly, offer other products. Like, for example, you have loan products today, tomorrow you want insurance, so what is the right fit for that? So big data or machine learning or artificial intelligence, all that we're using to help the customer essentially get the best possible option.
When I look at the number of mobile phones in the country, nearly 1 billion. So life evolves and devolves around a mobile phone. So is your service predominantly mobile service driven base, or is it also internet driven?
So we really don't worry too much on the format. As I said, like, you know, we have customers across segments, whether it's SME or retail, but mobile is of course convenient. But for financial products, sometimes you need larger formats. So the customer can access the site through maybe a desktop. But what is important here is, as I mentioned, to bring the turnaround time down and give the consumer that experience, that speed. That is very important. So, for example, retail customers, which are largely simple products like maybe a car or two-wheelers or other products, is a lot more simpler. You can access that on mobile, or even transact on mobile. And the other part is the same flow is available on the site as well. But at the same time, we have realized that SME customers typically they don't go online. So they need that assisted model. So that's why we have a Rubique tab solution. So our associate is sitting across the customer, filling in the details on the tab, and the output is generated and it's electronically transferred to the financial institution.
So how fast can I get a loan if I go through you?
So depending on the product, as I mentioned that retail products are a lot more simpler. So it will be very, very fast depending on the data which you provide. And the last leg which is required once you get the in-principle approval is one part, but documentation completion. So typically in 48 hours time you can get the money in your account if you have all the details available.
Tell me something, documentation has to be physical or it has to be digital, or the last mile has to be physical?
So there is a regulatory requirement, so you have to comply with that. So as per that, regulator wants you to sign the document, and we go by that.
So you were telling me earlier that your sector has been growing at 30-40% at CAGR. So where is the growth coming from? Is it car loan, or is it insurance, or it is SME? Where is the growth coming from?
We have seen across segments, like, for example, even SME, you look at it, is currently, we as a country, we are definitely a credit-starved country. We have more than $300 billion plus gap only in SME space. So that's again very, very massive. And each and every segment, whether it's cars or home loans, every pie is growing. So overall, this $500 billion plus market is growing as 20% CAGR. You can imagine the size, which is across segment. There's a huge amount of growth which is happening.
So which part of the financial sector is likely to be most disrupted? Is it consumer banking, fund transfer payment, investment and wealth management, SME banking, property and insurance? The question I'm asking is in light of what PwC Global Survey said. It was in this ranking, in this order globally. So that is same hold true for India.
So India is a unique market in that sense. It's slightly different from the countries we are comparing, maybe as, for example, US. So how I look at it is why there's a lot of interesting work which is happening across segments, whether it's insurance or mutual funds or loans for that matter. But I guess the larger opportunity, in my personal opinion, is like one is SME, which is like very, very large opportunity available, and there's a lot of good work happening there. And where with all the companies working, they can add a lot of value to the SMEs. Second, there is a huge opportunity which is available, and we have seen a lot of good work happening in that space as well, is the smaller ticket personal loans, and there's kind of a payday loans, even a peer-to-peer is just about starting off in a smaller way, but that's again a very large opportunity. And third being insurance, which is, I think it's in single digits in online. So there's a massive opportunity there is available as well. So these three segments in SME, then smaller loans, and third being in insurance, in my opinion, are going to be very large opportunities.
So since you're very technology driven, will fintech companies like yours drive a traditional bank and NBFCs? At least we are seeing the pressure in the payment banking space. So do you see yourself collaborating or competing or being part of the same value chain?
So there are two parts to it. One is that the opportunity is very large, as we mentioned, and how I see the model that first of all, fintech is just starting off. It's a very nascent stage. So the model is definitely going to be collaborative because each one is having its own strengths. And as today, at this stage, if we say that we are competing, it will not be correct. So how we have approached the model is we believe that we are collaborating with the existing ecosystem, not only with financial institutions, but across whether it's an influencer in that whole chain, whether it's a chartered accountant who is working with a particular bank, or directly with the bank, or anybody in that particular ecosystem. So to answer your question, I believe it's going to be a collaborative model, and this is how it will grow.
So in terms of customer acquisition, which is cheaper, a traditional bank and NBFC or fintech company like yours? So
fintech companies will definitely have the advantage because when they're using the technology, they have speed with them. They're agile because they're smaller size. Having said that, we have seen a lot of financial institutions, larger financial institutions, adopting technology and doing really good amount of work. But in the end, anybody, whether it's a fintech company or a financial institution who's leveraging technology, will have a lower cost of acquisition. That's my belief.
What are the emerging trends in fintech sector?
So fintech again is a very broad word. Globally, when we were part of a couple of large awards where we were the finalists. We had an opportunity to interact with a lot of large companies across the globe. So in my opinion, the most important, at least the take from me was, one is the data, how you're leveraging big data, that is one part.
Okay.
And the use of artificial intelligence, machine learning, that's one very, very important aspect, I think, which we will, in the next couple of years' time, we'll definitely see a huge amount of...
So some beginning has been made in like robo-advisors today, yeah?
Yeah, but it's just very, very nascent.
Nascent stage.
Very, very nascent.
Okay, Manav. Are there regulatory challenges since you're a nascent industry? What kind of support would you look from the regulator, if at all? There's one.
So what I believe is what we are bringing into the whole system is transparency.
Yeah.
And more important that is customer convenience. So somewhere that is something which will be evaluated by the whole ecosystem. And to answer your question, I believe any industry for that matter, while we are just starting off, will be definitely will be held with good regulations, and we are no different. So because we are bringing in transparency, because focusing on the customer experience, customer convenience, I'm sure the industry will grow with help of good regulation, and we'll welcome that.
What about safety and security aspect? Now we have seen data breaches. We saw some of the data being sold for less than a rupee, and we saw sometime back Union Bank very nearly lost 1,100 crores. So this is endemic to your sector. So how do you beat that?
So we are not different from any other industry in that matter, because as any technology or any company or any industry evolves, so the fraudsters, they find new ways to beat the system.
Yeah, sure.
So I think you have to keep evolving, keep learning, and that's how I see it. So that's one of the most important aspects, specifically in the financial services. But you have to keep evolving and keep learning, and make sure that this part is taken care of always.
So has the government's digital push strategy helped you all?
Certainly, I believe the government has done a commendable job so far in terms of pushing across the segment. There are digital pushes really doing very great service across segments, and it's definitely going to help. One, in terms of awareness to the consumers, is definitely adding a lot of value. Second part, like, for example, Aadhaar, eKYC, digital signatures, these are definitely going to help our segment in crunching the timelines from the consumer's point of view. And in the future, maybe something like DigiLocker. So these initiatives are definitely going to help. So anything from the government side in terms of regulation, in terms of visibility, in terms of awareness for the consumer, is definitely going to help.
Globally, the PE players are very gung-ho about this sector. I don't want to see it, but I was told something $150 billion investment expected over the next 5 years.
Right.
Is the same true for India? How is the scene in India? Are the PE players and VC looking at this sector very favorably?
At least personally, I have experienced that. In fact, as a company, we have seen a tremendous amount of interest from not only VCs but large private equity players. And because the reasons are, one, of course, the large market. Secondly, the push from the government sides. And third, specifically in SME, whatever is happening. So it's and overall as how we are changing as consumers. So it's a combination of all that makes India is a very, very attractive market. And secondly, when we look at the larger markets like China or US, when we have seen some very large players emerge in fintech space. So that's same story we will see getting repeated in India as well. That's why probably a lot of these investors are looking very positively towards India. And
so in terms of years, how many years we are away from them?
I have a different take on that, because I don't think that we have to go through the same sequence, because certain parts probably will leapfrog, we can and move to the next one, but there's a lot to learn and move very, very fast. So certain parts we can just skip and move to the next one, and in that space we will catch up much faster. That's what my belief is.
So how much catching up we need to do, the Indian fintech company vis-a-vis global counterpart?
So there are different components, because it's not about a particular company or the opportunity, is always the ecosystem. So while a whole lot of companies can learn a lot from the global counterparts, adopt those technologies, but how the ecosystem changes, you'll not have a control on that beyond a point. Like, in terms of like how currently a SME transact, or how many financial institutions are using eKYC or digital signature. Whole lot of things. So it's about the ecosystem. How fast the ecosystem evolves is the big question mark. But overall learnings from the global peers is, I don't think that's such a tough job. That will happen very, very fast.
So when you look at the disruption happening abroad in the financial sector space, where can India emulate? You recently went to Paris. You were quite impressed. So what are lessons for people, fintech companies in India?
I have seen a lot of interesting work, when Paris, some of the players who were there, like Atom Bank, which is a UK company. So they had virtually whole banking as a digital format, which they are doing. In China, I saw a company, Lufax, which is a fairly large $20 billion plus company, but they had a very interesting take on, while there's a very large peer-to-peer kind of a player, but they had an O2O model, online to offline and offline to online model. So there's a lot to learn from them. So in fact, our Rubique tab, when we introduced the format for SMEs, there's a lot we learned from Lufax in that sense. And so across, when I see players like Fidor, you have Sophie, you have Credex who are doing something for new to credit customers. So I believe there's a lot to learn from them, and we'll be able to implement a lot of these learnings and of course you'll have to customize them for our markets for sure, some parts of it, but there are a lot of learnings here.
Okay, my final question is, we are leading in the IT sector. India has shown its prowess there. Can India lead in the fintech space?
Certainly, that I believe so. Reason is, one, it's a very large market growing at a very, very fast pace, overall financial services. Second part is the major push from the government side. And third, the consumer aspiration. The combination of these three, I think it definitely makes this possible. And I certainly feel that if not the largest, but we will be one of the largest fintech economies globally.
So you're very optimistic.
Absolutely, yes.
On that note, Mano, thank you for being on the show. Thank you very much.
Thank you.
Focus, ideate, innovate, enable.